Now, colleagues, remember there is no spoon feeding in our classes. So, before I give the answer, I will let you try. Okay? Yes. So, we look at our first transaction. It says record the following transactions for the month of January for Boizani family. Balance of all the accounts and then extract a trial balance as 31st January 2023. So 1st January 2023, started a business with 205,000 cash. All right, colleagues. Before we apply the double entry rules, we have to first figure out which two accounts are involved in this transaction. After we find out the two accounts, we see are they both increasing? Are they both decreasing? Is one increasing or is the other decreasing? So I'll start. What two accounts are involved in this transaction? Colleagues, the transaction even says the accounts that will be found. So it's not that hard, okay? Just from reading, you even know which accounts are involved. Yes, Madam Betha. Which two accounts are involved here? Mm-hmm. Mm-hmm. Yes, go ahead. Yes, cash and capital. Now, that's first phase. Now, is one increasing? Is one decreasing? Are they both increasing or are they both decreasing? Is starting a business and is putting money into the business. Yes, Madam Yvonne? Madam Sue? Yes, cash is increasing. Uh-huh. So we come to this thing, okay? Cash is an asset, okay? Increasing an asset, so we know that we're debiting cash, right? Any questions on that one? We've, we've seen, okay, we're dealing with cash, which is an asset, and is increasing in this case. So increase in an asset, so you debit cash. So on your papers, put debit cash. Then what about capital? Hmm. Why? Why? Mm-mm. It's not reducing. Yes. No, cash is not reducing. Both are increasing here. Okay. Remember, capital also is cash. Remember, capital is all the resources that you put into a business, right? So think of it like this. Initially, before you put that money, there was nothing in the business. So you've put in cash. cash has increased. That cash is also capital, so capital also increases. So capital is here under the C. So increase in capital, you credit. So you debit cash 205,000 and you credit capital 205,000. Any questions? Mm-hmm. 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 No, the money is not being transferred to cash from cash to capital. There was no money initially in the business. And that money you've put in is also capital. So money is not transferring from the cash account to the capital account, It's being put in the business. So as the cash account is increasing, also the capital account is increasing. This is the duality concept of accounts. Okay, each transaction has to affect two accounts. So in this transaction, the two accounts are cash and capital. Okay, and if we remember, capital also involves cash and other resources. So as you have put the cash into the business, that cash account has increased. Okay, and initially there was no cash and there was no capital. But once you've put that money into the business, the cash increased simultaneously with the capital. Is that okay, madam? Or maybe I haven't answered the question. Let me know. Okay. Just remember both accounts were at zero. Okay. Any other questions before we move to the next transaction? And please record these journal entries because you have to make the trial balance and the income statement. So if you don't record these, you'll be behind. Put 90,000 of the cash into a bank account. Which accounts are involved here? Is one increasing? Is one decreasing? And which are those? Which one's increasing? Which one's decreasing? Mm-hmm. So cash is an asset. So a reduction in an asset, what do we do? Yes, so you credit cash. Then also bank is an asset. Increase in an asset, what do we do? So you debit bank 90,000 and you credit cash 90,000. Any questions? Bought goods for cash 100,500 kwacha. So, which two accounts are involved here? Okay. So, which one increase? Which one decrease? Yes. Purchases is an expense, increase, debit. Cash is an asset, reduction, credit. So you debit purchases 100,500 kwacha and you credit cash 100,500 kwacha. Any questions before we go to the next transaction? Okay. Bought goods on credit from Dhaka 8,000, Hambe 9,300, Sombaile 16,000, Lombe 5,100. So we've made many transactions with many people. So let's first focus with Dhaka. So how we do it with Dhaka, we'll do it with everybody else. So what two accounts are involved here? Remember, this previous transaction was a cash purchase. This one, it's a credit purchase. So what are we substituting cash with? When you buy on credit, what happens when you buy on credit? No one has ever bought on credit. Mr. Fred, what happens when you buy on credit? Yes, that is correct. That is actually correct. Colleagues, are we okay with that? Where we're crediting DACA, are we okay with where we're crediting DACA? Okay. So that's only Madam Yvonne. Madam, can you explain to the class why we're crediting DACA? Oh, I thought you raised. Okay, Madam Sylvia, are you okay with that? Okay, Mr. Fred, why are we crediting DACA? It's correct what you've said. People just want to know why. His account is not reduced. We are owing Dak, so he's a liability, a payable. Yeah. So think of it as the Nkongole has increased. At first you had zero Nkongole, now you've got Nkongole. So the Nkongole has increased. Okay? So Daka is a payable. A payable is a liability. When you come to our diagram here, liabilities, they increase with credit. Purchases is an expense. That's why we debited purchases. So you debit purchases. How much was this? 8,000. And you credit DACA 8,000. Now we could have totaled up all of these for the payables. The only thing is that further on there will be some transactions that will occur where these guys will get affected. Okay. So if you put it as an aggregate amount, you you want to be accurate with each person's how much each person is owed, how much you're owing each person. Okay, so for now, individually, credit each of them individually, then purchases debit in each transaction. Are we all okay with that? Because from here we're moving forward. We're not coming back to these things, colleagues. So we have to be okay. Mr. Dennis, are you okay with that? Okay. Yes. Ask, sir. Debited. Yes. You're talking about this transaction where we purchase goods on credit. Okay. Anybody to help Mr. Dennis here? Yes, please go ahead. Yes. So, Mr. Dennis, just to add on what Madam Sylvia, thank you, Madam Sylvia, for that explanation. Yeah. So, Mr. Dennis, purchases is an expense when you come to the double entry rules. Increase in an expense, you debit. That's why we're debiting purchases. Hambe, is it Hambe? What's the name again? DACA is a liability, is a payable. Okay, so it falls under liabilities. Increase in the liability, you credit. Is that okay, Mr. Dennis? Yes. Anybody else before we move to the next transaction? Okay, we go to the next one. Bought stationery on credit from Banda 890. Mhm. Remember, the first thought in your head is the correct. Okay. Whatever comes first is the correct one. Do not second guess yourself. All right. Only second guess yourself when you do not understand the topic. Okay. But here with this transaction, I think you know what's happening here. You just don't want to say it. Mr. Oh, let's see. Is Mr. Foster in? I saw him earlier on. Oh, he was kicked out. Okay, Mr. Twamb. What do we do here? Yes, yes, please try. Yes. Mm-hmm. That's correct, madam. Yes. Yes, colleagues. Any question? Stationery is an expense, expenses, debit. Banda, we haven't paid him, so he's now a liability, liabilities, credit. We move to the next one. Sold goods on credit to Ara Tonga, El Fashano, M. Sila, M. Sonda. So let's focus with Ara Tonga. What happens with Ara Tonga will also happen with the rest. Yes, we sold goods on credit to this person. Okay, so when you sell goods on credit, what happens? Yes, you give out goods and you don't receive the money. And it means someone is owing you, right? Somebody is, yes. So according to the accrual concept in accounts, okay, even though you haven't received the money, or even though you haven't paid for the expense, so long as it has happened or it has been incurred, you're going to record, okay, according to the accruals concept. So if you sell goods on credit, though you don't receive the money, you are going to record it, okay. So here the two accounts that will be involved is sales account, sales revenue, okay. And since we're not getting money, so it will be the Aratonga is a receivable. Okay, he's owing us money. So a receivable is an asset, increase in an asset, you debit. So you debit Aratonga. Revenue is here next with income. Okay, increase in revenue, you credit. So you credit sales revenue 1,700. Then you're going to debit Aratonga 1,700. Any questions? So that's the same you do with Alpha, Shanu, MC. Now, all of these are your receivables. They're owing you money. On the 8th, paid rent by check 2,200. What is being debited and what is being credited? Okay, can you just explain why, according to the double entry rules, so that everyone is on board? I've got you, sir. What you've said is correct. I'm just saying that kindly explain to the other colleagues so that everyone is on board, according to the double entry rules, why we're debiting rent, no, we're crediting cash. Okay, okay. Colleagues, anyone to explain why we're debiting rent and why we're crediting cash? Here the here the double entry rules. Oh, bank, yes, bank. Mhm. Wonderful. Mm-hmm. Mm-hmm. Wonderful. Yes. From that answer, we can even end the class here now. Seems now we've all got the double entry rules. Mr. Trumbo, haven't we all got the double entry rules? The madam has just explained it correctly, no mistake. Mm-hmm. Good evening. Oh, okay, okay, okay. Yeah, there was a question I posed. Huh? Yeah, well, it was answered. No, I'm not ending the class now. I'm not ending it. Yeah, I want to end it when, let's see, who hasn't answered here? The class only end when Madam Florence and Mr. Dennis answers some questions. Then the class just automatically ends. Or even Mr. Emmanuel, because Mr. Emmanuel hasn't answered. Who else hasn't answered? Mr. Nchimune also haven't answered. So once yes, Mr. Dennis. Mhm. Sure. Oh, okay. All right. Okay. All right, colleagues. So yeah, we debit rent expense, okay, and then credit bank. Yes. Number 10, bought fixtures on credit from Chef Limited, 6,100. Oh, you answered, madam. Okay, let's see where were we. Yeah. It is it's but here we're focusing. It's an asset here. It's an asset that you're we yes, yes. Let me just this yes, yes, yes. So yeah, which one are we debiting? Which one are we crediting? Mm-hmm. Yes, you debit fixtures. Uh-huh. Yes, the increase with credit. Yes. So this is what we call capital expenditure. Okay. In accounts, there are two types. There's capital expenditure and revenue expenditure. Capital expenditure is whenever you're buying assets and whatever expenses you incur to make those assets better or bring them to you. Yes, any costs, expenses associated with an asset falls under capital expenditure. The revenue expenditure, this is where now you're paying for the operational costs for the business. Like there, when you're paying for purchases there, that's a revenue expenditure. Whenever you're paying for operational things for the business, it's under revenue expenditure. But capital expenditure is whenever you're purchasing non-current assets. So do not make a mistake and put this picture's expense in the statement of profit or loss. No. Okay. Oh, Mr. Emmanuel, could you? Yes. Yes. So you debit fixtures, which is an asset, and you credit Chef Limited is a liability. Increase in the liability, credit, increase in an asset, which is fixtures, debit. Yes. Any questions? Any questions? Paid salaries in cash 7,900. Okay. Wonderful. Yes. And which one is increasing? Which one is decreasing? Salaries is an expense, increase in expense, 7,900. Oh, debit 7,900. Cash is an asset, decrease in an asset, So credit cash 7,900. Number 14, on the 14th of January, returned goods to Hambe 300 kwacha and Sombaile 420 kwacha. So this is what happened here. We sold goods earlier to these guys, Hambe and Sombaile. Now, and they were owing us. Now they've returned some goods. All right. They've returned some goods. So what do we call it whenever a customer returns goods to the business? Mm-hmm. Yes, sir. Hello? Sorry, I was kicked out. Someone was asking a question, then I was kicked out. So, what was your query? Oh, yes, 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 yes. Actually, thank you for that one, sir. Yes, it's actually us who are returning back to. These are our suppliers. Yes, yes. Thank you for that one, sir. Yeah, we are returning goods to our suppliers who we bought on credit for. Mhm. So, what do we call it whenever you return goods to your supplier? What when you return? Yes. Yes. And what do we call that, Mr. Twambo? When you mm-mm, mm-mm, mm-mm. The opposite. Return outwards. Return outwards. Yes, 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 yes. Purchase returns or return outwards, same thing. Okay. So since we have returned goods to our payables, okay, what happens? What's happening to how much we're owing? Um, 420. Actually, money is not coming into our accounts because we bought these on credit. Well, that we owe, right? So reduction in our liabilities. So reduction in our liabilities, you debit, right? Then purchase returns is a contra expense account. Okay, that's why in the trading account, you see where you deduct purchase returns. Okay, purchase returns reduces the purchases expense. Okay, so it's a contra expense account. Okay, so if expenses increase with debit, then a contra expense increases with what? Yes, credit. So you credit purchase returns and you debit Hambe, and also you debit Sombail, was crediting purchase returns for each transaction. In the in the these transactions, so when you've opened the accounts, these reductions will be done in these two, in Hambe's account and Sombaile's account. The only new account you can open is purchase returns. Like this is how it will be. Okay, okay. Wonderful, wonderful. Bought van by check 160,500. Mm-hmm. Yes. Motor vehicle account. Yes. Which one's increasing, which one's decreasing, so that we know what to debit and credit. Mm-hmm. Yes. So both accounts are asset accounts. Motor vehicle account increase, so you debit motor vehicle. Bank account reduction, so you credit bank account. Mm-hmm. 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 The purchases account is for goods that you're reselling. Motor vehicle, this guy doesn't sell motor vehicles. Okay. Any other questions before we move to the next transaction? Received a loan. Uh-huh. Oh, okay. Yeah, tell us the transaction. Okay, you're not wrong. You're not really wrong to think like that. But here, since we received money from Zananko, so we're owing Zanako, right? Yes. So increase in a liability, you credit Zanako. On Zanako's side, yes, they've lost money there. Okay. But we're talking from our own the business's aspect here. Okay. So since we're now owing Zanaco, increase in a liability, you credit Zanaco 20,000. And since now money has come into the bank account, so bank is an asset, increase in an asset, you debit bank account 20,000. But thank you for the try. Okay, the next one. Goods were returned to us by Aratonga and M. Sila. So remember these two people, what initially they bought from us on credit, right? M. Sila here and Aram Tong. So now they've brought back goods. So when a customer brings goods, what do we call that? Return in ones, or sales returns. Okay, sales returns. So sales returns is a contra revenue account because it reduces your revenue. That's why in the income statement, when you start sales revenue, they say deduct return in ones or sales returns. Okay, so it's a contra revenue account. So if revenue accounts increase with credit, contra revenue accounts increase with what? Debit, right? So you're going to debit sales returns. Then these people, since they've brought back goods, what they're owing you has reduced. Okay? Because initially Aratunga was owing you 1,700. Now he's brought back goods worth 500. So now he's owing you a 1,200. So this is a reduction in our receivables. Okay. Remember, receivables are an asset. Reduction in an asset, you credit. So you debit sales returns, then you credit Aratonga, reduction in a receivable, and you also credit MSIL. Reduction in a receiver. Well, reduction in assets, basically. Any questions? Okay, next one. Cash sales, 74,500. Uh-huh. And which other account? Cash account and which other account? Yes. Yes. So both are increasing, right? Cash is an asset, increase in an asset, debit. Sales revenue. So here where there's revenue and income, same thing here. Sales revenue increases with credit, so you credit sales revenue. Money has come into your account, so it has increased. Since you've sold more goods, so it means your sales also has increased. Sales revenue has increased. Sold goods on credit to El Fasciano, M. Sonda, and Araplit. Here. So these two are the similar. The only difference is cash hasn't exchanged hands. So what are we going to debit and what are we going to credit? We'll credit it. Yes. Sales is revenue. hmm They're owing us money and our receivables, right? So increase in our assets, debit, also increase in sales revenue, credit. Can someone jump in to explain? To help Mr. Twambo here. We've sold goods on credit. They are our receivables. Okay. We paid the following by check. Hambe, Sombaile, yeah, Hambe and Sombaile. So remember these guys, Hambe and Sombaile, we bought goods from them, right? On credit, right? So it means we were owing them initially. Now we have paid them. So what happens here? Mm-hmm. 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 Yes, we're debit. Yes. So we credit. Mhm. Yes. So these liabilities are reducing, right? So reduction in a liability, you debit. Okay. Remember here on the credit side, liabilities increase with credit. So reduction in a liability, you debit. All right. Then since we're also paying them, okay, to reduce this liability, we had to pay them. So our bank account is reducing. So reduction in an asset, you credit. Okay, so you debit Hambe Msombaile, reduction in liabilities, then you credit cash. Okay, reduction in an asset. Received checks from Araplit and El Fashanu. So remember, these guys, we sold them goods on credit. So now they are paying us. So what's happening here? Mm-hmm. Mm-hmm. Refine that. You're on the correct, yeah, you're on the correct path. Mm-mm. Yeah. Mm-hmm. Increase in an asset, right? Then since these guys are paying us, so it's like our asset also, which were our receivables, is also reducing here. Okay. So here, since our fleet has paid us, so what is owing us basically reduces. So reduction in liability, you credit. Okay, so you debit bank because you're receiving money. Okay, then you credit the receivables because They are reducing basically. Received a further loan by Zanaco. This one it's the same as number 16. Debit cash, credit Zanaco. Cash asset, increase in an asset, debit. Zanaco liability, increase in a liability, credit. Final transaction received 6,014 cash from Musonda. Remember Musonda, we saw it goes to him on credit. So what would be this journal entry? Hey, colleagues, we're just from doing this one. Mm-hmm. Mm-hmm. Yes. So Musonda reduction in an asset. This is a receivable. So reduction in the receivable. Cash is coming in. Cash is an asset account. Increase in an asset. Debit cash and credit Musonda.